Okay, I'd like to bring the Audit Committee meeting for June to order. Do we have any public comments?
Nope.
Okay. First thing I need is approval of minutes of the April 24th meeting. Get a motion, please. Can I get a second? All in favor? Any opposed? Carried. Work plan. Any changes to the work plan? Mike, I think we have one.
Just one, Jim. The status of open audit recommendations will be moved to the September 18th meeting.
Okay. Okay, the first thing on the agenda is the Independent Accountants Review Report for the first quarter of 2013. Have the light come up, and I think the first thing that I'd like to do is I'm going to pass out the new lead auditor for Deloitte is Mike Fritz, and I think he's sitting right here. If you don't remember, David Jones has decided to retire sort of unexpectedly, and consequently we're moving forward quickly to get this. Okay.
Good morning. As Jim mentioned, I am Mike Fritz. I'm the National Audit Partner for Deloitte in state and local government. I've been your concurring review partner for the last 4 years. And when David announced his retirement because of family matters, the firm had identified me as one of the candidates to potentially serve you, and I went through the interview process with several members of your audit committee. Look very forward to working with you. The MTA is a very important client of the firm, and we appreciate that opportunity to do that. Today we have several reports that we are going to share with you. The single audit, the quarterly review that we did, and then also a report on investments. I'm going to have my partner Glenn Friedrich actually present those reports to you.
Good morning. The first report we're going to go through is the quarterly review for the period ended March 31st, 2003. And what I'd like to do is draw to your attention again that the new AICPA clarity standards, which David talked about at the year-end presentation of the financial statements, has changed the presentation of the way we present the review report. So when you look at the first page and compare and contrast it to what was previously issued, it's a lot different because of the new standards, but it's consistent with what was issued for the 12/31/2012 year-end financial statement audit. So with that said, we have reviewed the accompanying consolidated interim statement of net position of the Metropolitan Transportation Authority as of March 31st and the related consolidated interim statements of revenues, expenses, and changes in net positions and cash flows for the 3 months period ended March 31st, 2013 and 2012. Again, it is the MTA's management's responsibility for the preparation and fair presentation of the consolidated interim financial statements in accordance with accounting principles generally accepted in the United States of America. Our responsibility as your independent auditors is to conduct our reviews in accordance with auditing standards generally accepted in the United States of America applicable to reviews of interim financial statements. A review of an interim financial statement consists principally of inquiries and analytical procedures, and it is substantially less in scope than an audit, the objective of which is to express an opinion on the financial statements. Accordingly, we do not express such an opinion, and based on our review, we are not aware of any material modifications that should be made to the consolidated interim financial statements that are before you. I would also like to bring to your attention in this review report, there is an explanatory paragraph concerning GASB statement number 65, which management of the MTA implemented for the first quarter. This statement takes certain items that were previously recorded on the balance sheet and buckets them now into what they call deferred inflows and outflows. So there's geography movement. In addition, there was items that were previously recorded on the balance sheet that are no longer recorded or no longer allowed to be recorded. Those items were disclosed in the MD&A. The total amount that was removed from the balance sheet and presented in the statement of net position or changes in net position was roughly $560 million, which is really the restatement based upon a retrospective application of GASB statement number 65. And we work closely with management for the preparation of these statements. So that was the significant change. with that, I would be happy to answer any questions that you may have concerning the review. Yes, sir.
The only question I had is, you have to define for me, what is unrequisitioned funds for capital expenditures for the MTA New York City
What-
Transit and Bus? That's
what-
on page 7.
Page 7,
On about the third, fourth, fifth paragraph down.
I might have to defer to management on that. I see what you're saying, the unrequisitioned funds for capital. That was part of theirs. I see.
Basically, that is that's basically charges for capital items for construction in progress. That the way the accounting works, it's kind of a timing issue where it eventually moves to capital. So for headquarters purposes, when we pay for capital, it gets charged to that category, and then when the transit authority moves that into fixed assets. So it's really just a timing issue between that category and fixed assets. So it tends to build up and then flow down. So it's really, I guess another way to look at it, it's really interim fixed assets that haven't been recorded. Fixed assets.
Why?
They're in process.
Why?
Are these not in service and so therefore aren't depreciable?
They're not depreciable. This is
Yeah.
all. This
That's
is
the
all.
point.
This is all construction in progress.
Yeah, seaway.
We expend money for a capital purpose, but until that asset is actually in service, it's not depreciable, and so therefore it's in a category that is not an active fixed asset. So, I mean, for any large construction projects, anybody who has investor-owned utilities, or anyone who has ongoing capital program, you will always have this kind of interim step. We've expended the money, and we have assets in the ground or above the ground or in, but they're not in service.
Right, well, all capital expenditures are done by headquarters, so it's just a timing issue. By the time the agency, it's usually mostly transit, will record that in their fixed assets.
It's more like
And-
construction in process.
Yeah,
Well, that's what it is, and to
right,
and to
right.
Bob's
Yeah.
point, that's disclosed in the footnotes. That's a category of the capital assets, and that's common, as Bob alluded to. I mean, the construction in progress is a large number until the project is completed. It gets hung up on the balance sheet, and then once it's placed into service, it, ultimately will be depreciated over its useful life. So that's common and typical.
I have 3 standard questions. 1, is it a clean opinion to the extent you render an opinion?
To the extent our review report is clean, as I stated on the conclusion, we are not aware of any material misstatements to the interim financial statements.
2, have you had complete, free, and untrammeled access to management and to all of its information and resources? And have they answered responsibly all of the questions you have posed?
Your first part of that question, the answer is yes, and to the second part of your question, the answer is absolutely yes.
So the answer to the question as a
Yes.
whole is yes.
Yes, but there was 2 parts, so yes, sir.
3rd, have you been advised that you have access at all times to all members of the audit committee to give your candid opinions concerning management and their ability to respond fairly and accurately to your questions?
We understand, and we do have executive sessions, as you well know, with the committee members, at which point we do have discussions.
Just want everything on the record.
Noted.
I have a couple other questions. Page 8. An increase in unredeemed fares and tolls from December 31st to March 31st. It seems like an awful big jump for 3 months. And
That could, I mean, again, that could possibly be, more likely than not, it's due to timing, because again, the unredeemed tolls, depending when they're issued, when people replenish the tolls and so forth, it is unredeemed, so it's carried as a prepaid. So again, like with Easy Pass and so forth, depending when those tolls re-up or replenish the Easy Pass, that could be the difference. It's probably purely just a timing difference.
yeah, I pretty much know it is. My concern was how big it is
Yeah.
for this particular quarter as compared to.
Yeah, I would.
I mean, it's mostly transit. I would guess it may
Yeah, the question was that the unredeemed fares increased by a very, very large number from December 31st to March 31st. And the question was, we understand what unredeemed fares are. The question is, why is it such a large increase for 3 months? So the airfare increase went into effect March the 1st. So we've got 1 month of that fare increase, but that still seems kind of large. That was the question.
I think that the comment that was made that it's a timing difference more than anything else, and it's going to be adjusted as time goes on, would be really the correct answer for that.
Okay, can we make sure that come June 30th, we look at that again to see how what happens to it then?
Yes, we will. We'll investigate that further and get back to you on the reason and see that, make sure that it follows that.
Okay. The other question is on page 24. We're at a time here where we're concerned about our finances and we're trying to hold everything in line. But I think the same comment was made on December 31st, and that is our salaries and wages have gone up again by 28, 30, 31 million. And I guess from a board standpoint, we're really think that we're trying to drive those salaries down. And when you see something like that, there's always a reason. But I want to get the reason before it goes any further.
Or is there a good reason?
Right? So the question is, why the salaries go up by, like I say, 31 million over 1 quarter? How come?
Is that salary increases or promotions?
Don't know.
If you go to page 11,
If it's overtime, it's probably controlled too.
if you look at total operating expenses, you move down to the bullet where it says salary and wages increased by 31.
Mm-hmm.
Basically, it was overtime. And I think that was brought up in the finance committee meeting or something. Andrew brought it up, so it's really overtime.
Okay. Just wanted to get on the record here. There was one more question I had. Well. Nope. Okay, can't find it. Okay, so we need a vote required for the issuance of that first quarter. Sure.
To what extent, if any, do you examine into consulting agreements between any of the MTA operating entities or the MTA qua MTA and outside consultants to determine whether those agreements are followed, whether the amounts paid are appropriate to the occasion, or in any other way? Do you audit any aspect of that?
The answer is yes. At year end, as part of the expenditure testing, the procurement cycle, we do look at those expenditures, and then we do go back to the actual contracts themselves to make certain that the expenditures were in conformity with the contract and the agreement. Several years ago, there was a special project that we undertook on behalf of the audit committee to look at those contracts to ensure that the expenditures that were being incurred, as well as the change orders that were being incurred, were appropriate under the circumstance. But again, during the year-end audit, as part of the expenditure/procurement testing, we do look at that specifically for the capital assets and others.
What I'm interested in ascertaining is the extent to which any checks and balances exist respecting the retention through the vehicle of consultants of entities that would perform work that otherwise would be required to be brought to the attention of the board, and this is a bypass method, or two, contracting out. Do you do any compilation of the aggregate amounts of all consulting contracts and their purposes?
We do not perform or produce a compilation of such services.
But
One thing I think involved in that field is our own internal audit department. They work and they go in and they do audits of many consulting contracts, many contracts, and a lot of times at the request of whoever has a concern. Let's say we would have a concern, Mike, go audit this area. So Mike, why don't you speak?
And also, to answer your most recent question, as part of our audit planning process, we get such a list of consultant projects, both on construction and consultants. So we have such a list from which then we base a selection of consultants which we will audit, and for compliance and for, accuracy of payment.
What I would like to see, if it's not too burdensome an activity on your part, is consulting contract numbers and names or areas for the first 6 months of the year, when and if that can be compiled.
Such a list exists.
Again, my target of inquiry is contracting out, and whether or not this is used as a bypass method to do, in effect, off-balance sheet or off-board approval retention.
I'll provide such a list to the committee, I'll send it to Jim and to the members as well.
Good. I just picked up the question I had, and I think Bob can answer. There's a long schedule here on page 87 on leveraged lease transactions, and I think we just went through this a couple months ago with you, where there were some lease transactions that we found it was advantageous for us to.
Yes. As you recall, we have been reviewing the terms of leverage leases to see what contracts we may be able to terminate to our advantage. I mean, these were contracts that we entered into that provided significant benefits in terms of upfront cash to the capital program. And we're talking, more than $1 billion of benefit that we've received from these. And these contracts were entered, or these transactions were entered into with the expectation that we would receive the benefit up front, and there would basically be no obligation again for the often 30-year life of these contracts. However, there are multiple parties involved, and there were parties that were inserted into the transaction to provide comfort to all, to the counterparties for us, that they would have security. Some of those intermediaries, which were AAA at one time, lost their AAA rating. And when that happened, we were at risk of having to put cash up, or U.S. Treasuries up in this regard. And this year, with the board's approval, we were able to terminate some of these transactions at no cost or small cost. In so doing, it turned out eventually we avoided a incredibly substantial cost that we would have incurred in north of $400 million. So I think it's a testament to Jerry Page, Paula Serra, and some other folks who really monitor these transactions and these contracts and arrangements very closely, look to see where we're at risk, bring it to the board, and again, I have to say we greatly appreciate the board's prompt action on this, because we were able to avoid something that could have been quite costly to us. Again, I believe these transactions that we entered into were done well. I think we were well protected from the very beginning. Substantial benefit to the capital program, but it just shows that you got to monitor these things and watch them. And I think Jerry Page and Paula Serra have done an excellent job of watching and protecting and thinking, recognizing that risk continues. It's not just up front, you got to look at it. You have to watch something over a 30-year period, even when it looks like there's no activity going on, because we want to make sure that the benefit we first garnered will stay with us. So that's the activity that we had this year.
Well, the reason I brought it up was because it just gave me an opportunity to show the transparency between what we go through at the board level during a quarter and what ends up in these financial statements. And they all have, all have a consequence. And at least they're here. And when I was reading this, I remembered all the briefings that we had gone through to find out what was good for the MTA. So I just wanted to make sure that everyone, because I'm sure everyone will remember the briefings because they were quite lengthy and
Good, thank you.
okay. Okay, any more questions regarding the March 31st financial statement? If not, can I get a motion to approve as submitted? Can I get a second? All in favor? Any opposed? Okay, it's carried. Okay, next on your list, there's the single audit report.
Terrific. The next item, as Jim alluded to, is the single audit. It is the second largest, or it's probably the largest packet that you have in your audit committee booklet. What I'd like to do is go through just those independent auditors' reports that are specific to the single audit. This document contains the financial statements for the year ended December 31st, 2012, which was already presented and accepted by the audit committee. But under OMB Circular A-133, which is the single audit requirements of the federal government, there are several other opinions that need to be attached. And the single audit relates to the federal awards and grants that the MTA receives and uses for expenditures for capital projects. So the first independent auditor's report on internal control over financial reporting and on compliance and other matters in accordance with government auditing standards was a clean opinion. It was an unqualified opinion and we had no findings. As it relates to the second opinion, which is our report on compliance required by OMB Circular A-133, and these are the specific compliance requirements of the grant agreements between the MTA and the grantor, we had 3 findings, one of which was a significant deficiency, and they are disclosed in the findings in question cost, as has been consistent with past years. In addition, we also include in the report what's called the Schedule of Expenditure of Federal Awards, which breaks out by CFDA number the awards that the MTA received and expended during the current year. That's information that the federal government uses to monitor your compliance and ultimately to determine whether or not they should come and inspect you. You've been inspected in the past by the Department of Transportation. So again, that's included there as well. And then we have the Schedule of Findings and Question Costs, which goes through in detail our findings as well as management's responses. At this point, I'd be happy to answer any questions regarding the single audit that we will file with the Federal Clearinghouse.
Any questions regarding the single audit? Okay, can I get a motion to accept? Second? All in favor? Any opposed? Carried. Okay, investment compliance report.
You have before you a one-page document, which is our investment compliance report. So again, we have audited in accordance with auditing standards generally accepted in the United States of America the consolidated financial statements of the Metropolitan Transportation Authority as of and for the year ended December 31st, 2012.
Okay.
In connection with our audit, nothing came to our attention that caused us to believe that the authority failed to comply with the authority's investment guidelines. And those guidelines are predicated by New York State Comptroller's Investment Guidelines, Sections 2925 of the New York State Public Authorities Law, and Section 201.3 of the New York State Public Authorities Law, the investment guidelines. And again, nothing came to our attention that caused us to believe that the MTA was not in compliance with all of the investment guidelines based upon our testing that was performed for the year ended December 31st, 2012 audit.
My only question was, in reading the management letter, there is a deficiency regarding the fair market value of investments. Does that have anything to do with that report?
No, because again, the fair market value is one of those whereby there's different methods used to calculate the fair market value. However, the investments that the MTA held were permissible under the investment guidelines, so it wouldn't cause an issue as it relates to us rendering an investment compliance report.
Okay. I have to go back to the independent report for 2013. John came in. We were short a vote. When we made that vote, we needed John's vote, so we're going to have to re-vote the independent auditor's report for the first quarter 2013. I need a motion again. Second? All in favor? Yes. This is the to March 31st, 2013 interim financial statement. Okay? All in favor? Any opposed? Carried. Okay. Now we're down to the investment compliance report that Glenn just gave us. Can I get a motion to accept it as it's been provided? Second? All opposed? Any opposed? Carried. Okay, management letter.
The last item on the agenda is the consolidated report to management for the year ended December 31st, 2012. Again, we've previously distributed this to you, the audit committee members. We worked very diligently with management and their team to go over the comments and ultimately receive agreement from management. The conversations were robust and there was a lot of back and forth, but ultimately at the end of the day, management takes our comments seriously. They act upon them, and clearly this was indicated in the actual report to management itself, because I would like to commend management. The prior year comments that were addressed in the current year were 28 in total, which is significant. So again, management does take these comments seriously, and they do act upon them, as does Mike and his team. So at this point, rather than go through the various comments, I would like to open up to questions that you may have regarding the comments that are in our letter.
I guess a couple questions. When you go through this process, do you go back and verify what management's responses were in prior audits to make sure that they followed through on what they said they were going to follow through on?
Yes, to the extent that we had prior comments and management believes that they have been addressed and cleared, first and foremost, before we even start our audit engagements, each team has a copy of the prior year comments. And as we're doing our substantive testing as well as our control testing and the actual planning of the engagement, we look at those comments to make certain that what management has responded in the prior year, because a lot of times the responses are after the audit has been completed but prior to the issuance, that they have addressed them in the first quarter. So we look to ensure that management has in fact addressed them and that we're comfortable, because if we have a disagreement, as you will note, the prior year comments are carried forward with a status for the current year, which would have been 2012, which would state that the comment is still in effect and it hasn't been remediated. So we do look at that, absolutely.
And you will recall that we've brought this up before to make sure that there's some answers to all the comments that are made, and we don't want them to go too far down the line before they're finally.
And that was your suggestion many years ago, whereby we stratify the comments and how long they've, for lack of better terms, been out there.
You know, generally, as I read through this, there were really three areas that, and I guess for me, it seems quite simple and ordinary, and I was surprised. One was bank reconciliations, accounts payable verification at year end, and succession planning were three items that were prevalent through this whole management letter. Could you just touch on them just so we got something on the record?
Sure. The succession planning is something that clearly is at the forefront of everyone's mind currently. We've spoken with management at the various agencies, and given the institutional knowledge that's vetted with senior management who ultimately could retire or are retiring, there is a concern of ours, because the bench strength, as we like to call it, or the succession planning, while there is some, it doesn't appear, or it appears it could be bettered, and it's something that needs to be taken seriously, because when we look around and we deal with the various agencies, the discrepancy in age between the senior management and those that are the up-and-comers is significant. And the issue or the risk you run is if in fact someone does leave abruptly because they can, that institutional knowledge walks out the door. And that's a concern of ours, and it's been a concern of ours, and we see that a lot in the public sector arena, whereby the management in today's day and age is of a senior level, and the staff that is below them is very junior or unseasoned, and therefore there is a risk. So we wanted to bring this to the committee's attention as well as management's, and we've had conversation with management quite candidly regarding this, especially over the last couple of years, because we knew there were retirements pending, and it's something that needs to be addressed in order for the MTA to continue its operations as it has been doing on a daily basis.
In regards to, good answer, but okay, in regards to bank reconciliations and accounts payable, bank reconciliations, I mean, I'm just a small-time accountant from Dutchess County. And, bank reconciliations are an important part of us throwing our financial statements together. And if there's a shortcoming in the bank recs, and also in arriving at accounts payable at the end of a period, now the question becomes, what effect does that have on our financial statements?
The issue's this. The bank reconciliations are typically done timely. However, there are those items and instances whereby the reviews may not be done as timely as management would have expected them to be, or the reviewer's signature was not affixed to the reconciliation, or for that matter, reconciling items weren't recorded in the general ledger, or they were done so late. From a materiality perspective and the risk that your financial statements would be materially misstated because on certain instances these controls may not be operating as management intended 100% of the time is de minimis, but nonetheless, because these controls are adopted and are in place for that reason, to identify and to help promote strong financial reporting and accounting, we feel that it's necessary to reiterate, and this has been a comment over the years, whereby certain years, again, based upon our selections, we noticed no instances of issues or concerns, and then there's other instances whereby, things get missed, and it's just due to possibly the volume of, bank reconciliations that are being performed, and the paper that moves. I mean, the MTA is a large organization, and, there are instances, but these are not of a magnitude that would ever, percolate up to be what I would consider a material weakness or a significant deficiency. It's more of a best practice. And the same thing with accounts payable. It's similar. Again, accounts payable, if you were to look at the volume of transactions that this entity does in a single year or a given quarter, it's mind-boggling. So to say that, a couple instances were missed and, accruals may have been missed and so forth, does it happen? Yes. Does it materially impact the financial statements? No. And again, it's brought to the attention of management and you, the committee members, because we feel it's important. And it's one of those responsibilities that you should be aware of, just to make certain that management is, performing their duties as you would expect and given the controls that are in place.
Last question.
Sure.
Inventory at Harmon.
Mm-hmm.
There's indicated on page 34 that there is some inventory that is not part of the PeopleSoft inventory. And that and reading through it, it's kept on spreadsheets. The question is even though it's kept on spreadsheets, hopefully it's still part of our general ledger somehow.
It is, and management can probably address this in further detail. However, this is something that management is working on. It's one of those locations whereby the implementation or the migration to PeopleSoft is somewhat difficult given the nature of the inventory, and the spreadsheets, obviously, we look at it because it's not maintained on PeopleSoft as part of the year-end audit. So again, we do look at it to test to make certain that the valuation associated with that inventory balance is fairly stated and presented accordingly in the financial statements. So they are working on it, and again, if I'm looking, I don't recall what management's response was this year, but again, it's an in process and it's taking.
Steve? Okay. And you can imagine that every time I see spreadsheets, it worries me, because I've gone through spreadsheets where we had a spreadsheet to accumulate all the data for all the agencies to come up to a consolidated financial statement, and that wasn't too long ago. So I see spreadsheet that lasts forever. That's right. It's concerning.
I lived through that pain.
Okay, I need a motion to accept the management letter as submitted. Got a motion? A second? All in favor? Anybody opposed? Great. Now, I have to go all the way back. We do have some public commenters.
Speaker, yes.
Okay, so if we can bring them in. Thank you. Speakers, Murray Bowden. I don't have it in front of me, but I know the man. There.
Susan, we spoke the other day. You were concerned about an organization being out of control. This one's out of control. I was here 8:15, 8:15 this morning. Everybody knew I was coming to the meeting. The meeting started without me, completely illegally. You want me to follow the rules? You follow the rules. This is an accounting meeting about following rules, and you break them. The law specifically says you cannot start this meeting until the public is permitted to be here. So which rules do you follow, yours or mine? You break them, I break them. Wait till we get to the board meeting. I'm not following any of those rules. I'll do whatever I please, and if you want to carry me out of here, that'll be fine. The Metro North detectives knew I was downstairs. Senior management knew I was downstairs. Half a dozen people knew I was downstairs. How'd you get my name? I'm furious. You're here to check the rules, and you break them?
You're on. 2013 audit plan status.
Thank you. Good morning. I'd like to update the committee on the status of the Internal Audit Department's activities as of May 31st, 2013. In this presentation, I will re-emphasize our 2013 goals, review the overall audit plan status at this point, and share the results of our management surveys that we send out annually. Just to go over our goals real quickly, it is to focus our work on risk, internal controls, environment, and cost of operations. We also support agency-wide goals and initiatives, and we promote effective corporate governance, and as previously discussed, ensure the securement of the implementation of our audit recommendations. This is the summary allocation of our resources to be provided to the agencies. This is also consistent with the resource allocations presented to you in January when the committee approved our 2013 audit plan. This is the... Yes. Sure.
What are these figures based on exactly?
Audit coverage, the resources that I have in manpower, and how it's allocated to the agencies.
Okay, in the last year, at least, maybe 2 years, Metro North, from what we have seen, has surpassed the Long Island Railroad in ridership, and possibly now in frequency of service with the latest schedule. So I'm just wondering, does that get revisited at any point, that slight difference between LIRR and Metro North? Or?
Well, you know, there are other factors that we look at also when we do audit plan, financial exposure, concerns from management. I mean, Howard Permit is a very pro-audit-oriented president. He does want coverage, his coverage. One of the issues the presidents had when we did consolidate as an audit department was, am I still going to have my internal audits? So, to answer your question, yes, they do show those indicators, but also there's audit risk and coverage that we provide from an assurance point of view, proactively, and for areas of concern that we may have both with management. So it drives it. Yes, just us.
Let them know what your resources are.
Yes, we have 85 auditors that cover these 6 agencies, and that's one of the challenges of providing coverage to such a broad agency as the MTA. Is you have to do MTA headquarters plus the agencies, plus all the external a sample of the external providers that do business with the MTA. So, and I'll get into that. To provide such coverage with the resources, we break down the MTA into these functional areas: finance, revenue, procurement, material, service delivery, capital, HR, and technology. These are samples of the type of audits under each category that we perform for 2013. Our work to date included some projects I'll show you in the next slide, but to answer your question before, Mr. Murdo, our coverage of outside consultants, for example, is covered under capital program, under our third-party contracts on the last line. Sorry, I need to click. And under procurement, under operating contracts and operating contracts. We have a list of such contracts, and we provide a sample of such. So to go over some of those highlights that we did in 2013, we're actively involved in the Superstorm Sandy costs and work that's being done. We're performing agency-specific reviews of costs associated with the preparation, repair, and rebuilding efforts related to Superstorm Sandy. We'll ensure that all costs submitted comply with applicable federal regulations, and we've been working very closely with MTA headquarters staff here to ensure that it's achieved. Under subway, we perform various audits of subway in the safety area to ensure the compliance with their rules. Our work has been very active in the pension area and in costs of operations such as diesel fuel, and we're actively involved in the B&T Release 2, which will complete the Release 2 of the Business Service Center. It's the last payroll to go on, and HR. Later in the year, we're actively involved in that task force as well. Yes.
Mike, I have a question. Can you go back to that list?
Sure.
Yeah. How do you, I know there's a lot of overlap, and obviously out of necessity, but how do you decide which audits, which areas? Do you consult with our outside people? Because obviously with limited resources,
Sure.
you can't do everything every
Well, there's
year.
various ways. First, you have to identify the entire audit universe, which you're right, could be hundreds and hundreds of items for the MTA and its agencies. And then risk is associated with that. We have 5 categories that we assess risk against, such as the financial exposure, the existence of existing controls, the impact of technology, the quality of policy and procedures. So we will select audits, but then we coordinate actively with Deloitte every year to look at the areas that we're going to be doing, the areas they're going to emphasize in their particular audit. We perform more than 100 interviews with management. We meet with the IG, we're aware of what the state and the city auditors are doing as well, because you're right, you don't want to duplicate resources. With that said, the MTA is large enough with all that coverage that there is still a lot to audit. So that's how we conduct it, to ensure that we're not wasting our resources and maximizing areas that we would look into.
Ever talk to, though, the outside auditors? About
Absolutely. Well,
which to do, which not to do, what they think? Not that they're going to.
Absolutely. Well, we're talking about several things. We're talking about risk and the implications of risk in certain areas, what they're seeing, what we're seeing, how level we should go down, what areas we think we should emphasize more that maybe they couldn't get to on their audit. They get a copy of all our reports. They do review them. They incorporate our work into their thinking when they do their own risk assessment, because during the year they get a copy of the results of all my audits. So we are actively coordinated with them, yes.
And the last question on this.
Sure.
And to assure that there's no duplication with the other various officials who are auditing us, do you consult with them? That's the
I
part
do
didn't
meet with them.
understand.
For the Inspector General, I sit down with him. We have a half-a-day session where we go over our plans together.
What about people outside MTA, other states?
You know, if the state and city are doing it, I usually stay away from that area, or I will talk to them and see what's their area of scope. But usually I will defer if they're doing, let's say, an overtime audit at an agency, and I had overtime selected. I will call them and see the level of scope that they'll do. Perhaps I'll defer it and wait and see what they come up with, and maybe I'll do it the following year, or not at all, depending on how deep they did. So, absolutely, it's considered.
Thank you, thank you.
Yes.
The same slide.
Sure.
Where does the revenue from the battery parking garage fit under revenue? Is that going to be, it's not a rental property, is it? The
battery park garage is real estate activities. I believe that flows through. So close to this thing, I have to step back. Oh, I'm sorry. It's on revenue. It's under it's under rental property income, correct? Lenny? It's under rental property income. Even though that facility, we rent it out, and we share in some of the income that's given by the parking lot attendant. The real estate function has asked us, as we interview with them, to audit many of the revenue streams that they have. So these are recurring audits that we do annually because of the importance of them to the MTA. Okay, so in summary, we had a very productive first 5 months of 2013. We completed 58 projects and 69 contract audits with over 200 recommendations. At this point, we are on target to complete our audit plan, and we will keep the committee apprised of any changes. We had excellent results on identifying cost savings, just so you understand what cost savings are. They are the impact of an audit finding. When you have a condition, we do, if we can, quantify and to say what is the effect of that deficiency on the operations, so we can also use that to drive change in the organization in order to save costs and implement our recommendations. So on the operating side, we identified $10.4 million and an additional $17.3 million on the capital side. We have provided these results to management, and they're taking corrective action to achieve the results.
We'll have a follow-up report, I presume, on what those specific
Yes.
actions were and what results they yielded?
Absolutely. I monitor these things, and in fact, we do not count a cost savings unless it is achievable. You know, we do not quantify a cost savings if it, you know, would not be able to be had. But we do follow up vigorously. I meet with Tom Prendergast and tell him, particularly on the significant ones, the status of it. If I need his assistance on particular ones to secure implementation, I do meet with Tom and provide some action, because we understand the importance of this and the effect it has on the MTA from a positive position. Our performance agreements, annually we sign up to performance goals with each agency president. These agreements include our commitment to provide quality audit services, as I explained before, to the MTA and its agencies. Part of these agreements is a commitment to survey the agencies to obtain feedback on our performance. We sent out 72 surveys earlier this year to each agency head and senior management where we've been involved with. We received a response rate of 85%. The results of the survey information is reviewed, summarized, and analyzed for trends, and followed up where appropriate. We request comments in 4 areas. Scoring is on a scale of 1 to 5, where we look for 3 as an indicator of good performance. And once again, we achieved overall positive results, and we do meet with management and talk about the results of our surveys. Just to talk about the staff. To achieve quality results, it does take a professional staff. I'm pleased to inform the committee that we have a staff with a high degree of education, competency, and certification. This is evidenced by 51% of our staff being certified as either a certified internal auditor, certified public accountant, or certified information system auditor. I'm continuing to emphasize to the staff the importance of obtaining and maintaining professional certifications. Just to close, one of the things that we're required to do, and the question you might have, is who audits the audit department? The audit standards that we follow and best practices of audit departments require that audit departments get an external quality assurance review. Standards require that's done every 5 years. This is the second one under my term that we had completed in earlier this year, and we had obtained APTA to conduct the quality assurance review, and it was performed on-site in my offices January 29th to February 1st, with activities including the review of our policy procedures and work papers for completed audits, interviews with staff. They met with Jim Sador as well as chair of the audit committee. They met with many MTA stakeholders to find out how it is to deal with the internal audit, what kind of coverage do we provide, what areas do we get into, how do we follow up on our audit recommendations, and a list of other questions that they would have. The peer review panel found, I'm glad to say, that the Audit Services Department functions of the MTA fully complies with the IPPF auditing standards. Policy and procedures are in place and were judged to be in accordance with generally accepted auditing standards, and the report was distributed earlier in the year to the full audit committee. The scope of the review focused on these 11 areas, including purpose, authority, and responsibility of the department, how is our charter, how is our independence and objectivity, our proficiency and due professional care as we do our audits, how is our quality assurance, because during the 5 years we also required every year to make sure we audit ourselves to make sure we're complying with our standards, what is the nature of our work, what do we audit, how do we do our audits from a planning perspective, how do we execute the field work, how do we communicate our results, how do we monitor progress, implementation, and the acceptance of management's risk and implementation audit recommendations. So with that, I would conclude my presentation and thank the committee for its support. We had APTA do it this year. APTA has the American Public Transportation Authority. APTA does several quality assurance reviews of the MTA and provides association.
I can say that I met with the auditors, and the thing they couldn't get over was the amount of work that my department did in an organization this big. and they were very, very well pleased. And so every once in a while, it's good to give Mike a pat on the back and his staff who are with us today.
Thank you. So noted in the minutes.
Okay, our next meeting is not until September. So I'll ask for a motion to adjourn. Carried.
Jim, thank you so much.
Okay.
Appreciate it.
Talk to you.
Good. Mr. Farrar, thanks for coming.